Hello and welcome to Business Incorporated live on Channels Television, your daily window into the world of markets, money and global economy. Here's what we're tracking today. African Development Bank and Ethiopian Airlines signed $500 million deal to build Africa's largest airport. And Egypt scraps plans to require halal certification on all UK dairy exports. And South Africa is seeking U.S. tariff cuts with revised trade deal. Great to have you on this half-hour show. I'm Will Ibang. First, let's check in on the commodities market. Oil prices we see held steady on Tuesday after the United States and China extended a pause on higher tariffs until November the 10th, easing concerns that their trade disputes could hurt global growth and fuel demand. We see Brent crude was up 0.29% at $66.82 a barrel, and we see WTI, that's the U.S. West Texas Intermediate, up 0.19% at $64.08 a barrel. Now, the truce we're talking about is possibly going to delay triple-digit duties on Chinese goods, giving U.S. retailers breathing room ahead of the holiday season. Now, the move raised hopes that the world's two largest economies could reach a deal and avoid a standoff that might slow oil consumption and pressure prices. Now, let's check in on the metals market now. We see gold prices eased higher on Tuesday after a sharp sell-off in the previous session as investors focused on U.S. inflation data that could shape the Federal Reserve's rate cut timeline. Spot gold was up 0.2%, see that on the screen. And we see U.S. gold futures also unchanged at $3,398.90. Spot silver is $37.37 a barrel, per ounce. And we see platinum up 0.9%, while palladium's also strong at 0.68%. We see bullion sliding, that's the gold sliding 1.6% to more than 1 week low on Monday. But we see futures dropping around that after U.S. President Donald Trump ruled out tariffs on imported bullion. Elsewhere, spot silver fell. We see it's falling, as I mentioned earlier. But let's look at other markets now and see what's happening, especially with vegetable oil. Globally, prices have surged to a 3-year high, driven by tight supply and strong demand. Now, in contrast, Nigeria's seen prices ease by nearly 8% from 19,000 naira in May to 17,500 in July, creating a clear divergence from international trends. Rosemary Yahira, analyst with financial derivatives company, joins us to unpack this. Good afternoon, Rosemary.
Good afternoon. Thank you for having me.
Rosemary, we see the UN saying global food prices hit in a 2-year high in July, and this was driven by vegetable oil, largely by that. But in Nigeria, prices are easing. What's behind this difference, and is it short-term or sustainable?
Well, on the global front, it is a case of weakening supply and stronger demand. So on the supply aspect, there isn't a lot of vegetable oil going into the market because stakeholders are diverting commodities like soybean, groundnut into the production of biofuels because there's a rising demand for biofuels, and stakeholders feel like they're going to get more returns or more value for their work when they divert these commodities into the production of biofuels. So we have lesser supply at the moment of vegetable oil, and the demand for vegetable oil globally is rising. So shrinking supply and rising demand, that equates to higher prices. But if you look at the domestic front, we are seeing increased local production of vegetable oils with new competitors coming into the markets. With this, we see increased competition, and with increased competition comes increased efficiency, and with that, there is a reduction in price. Coupled with this, between May and July, the price of soybean has been declining, and exchange rate has been relatively stable because we do import some soybean to kind of augment domestic demand, because we have a deficit of about 1.25 million metric tons. So we import to offset the deficit. So we've seen less pressure on imported raw materials. So that has also helped to ease the price of this commodity locally. Is it going to be short-lived? I would say yes. So for the third quarter of 2025, we're going to see prices remain relatively stable. But as we move into the final quarter of the year, gradually moving into the festive season, we're going to see an increase in demand, an increase in uptake of this commodity, and this is going to affect the price and cause it to go up.
Okay, but still in Nigeria, in a country, health concerns over unbranded high cholesterol oils are changing consumer habits here. How is it affecting vegetable oil choices? You've mentioned about, using biofuels, but now we're talking about health. What are other healthier options people are turning to right now?
Well, with regards to how its demand is shifting, we're seeing Nigerians or consumers moving to branded oils. They are demanding more branded oils because branded oils are saying, or they are advertising that our oils are low in cholesterol, low in trans fat, and they are fortified. They have omega-3 acids, vitamin A, and the likes. So as Nigerians are becoming more health conscious about these repackaged oils that they sell in used bottled water packaging and all of that, and they're becoming more health conscious that these sort of oils are dangerous for their health, and they are going towards branded oils. They're becoming more health conscious, basically. And there are other alternatives. So instead of frying, they go for steaming, boiling, or even air frying. And even more, those super health conscious Nigerians are even going for cold pressed oils like cold pressed olive oils, coconut oils, and the likes. So their demand is shifting from these somewhat dangerous, cheaper alternative oils to more branded oils and healthier options, basically.
Hoping that the branded oils stay cheap because they don't come cheap, we know that. But let's look at what the Nigerian Export Promotion Council, NEPC, is saying. Saying we are the world's third largest oil producer, and we derive granite oil from that, and exports 212,000 metric tons of soybeans annually. Yet, still import about 1.12 billion soybean oil in the first quarter of 2025. What's holding back local vegetable oil production, and can Nigeria scale up to cut down imports?
Well, there are a number of challenges that are basically creating bottlenecks in us being able to meet domestic oil demand. So for one, we have low yields from aging plantations. So like I mentioned earlier, we have a deficit of about 1.25 metric tons of soybean oil, which we have to import. So coupled with that, we also have weak refining, processing, and storage facilities. And another major one is funding. Funding and investment is really, really low in the edible oil sector. And although increasing or scaling up our productive capacity is realistic, but it is not automatic. We need to have targeted and consistent policies and investment going into that sector. And we have been seeing a number of them recently in 2025. In January, something was recently launched. The National Soybean Production Policy and Strategy was launched. And this is supposed to increase the number of farmlands where soybeans are being produced from under 1 million metric tons to about 2 million metric tons. And this is going to help increase soybean production by an additional 460,000 metric tons annually. So this is going to increase production. It's going to help us offset the amount of soybean we import into the country, and it's also going to create jobs and make this commodity more affordable going forward. In addition to that, there is an ultra-modern oil production facility that has been established this year as well in Bora in Nasarawa State by the CSS Integrated Farms Limited. And this is also going to help us to increase local production of this commodity, and gradually with all these policies and a number of them along the line coming is going to help to reduce the price of this commodity in the future.
I will pray speedy production for these commodities in Nigeria and help Nigerians ease price of commodities, especially essential commodities like vegetable oil. Thank you so much, Rosemary Ahira, analyst with Financial Derivatives Company, for joining us on Business Incorporated.
Thank you so much for having me.
Let's turn now to other stories affecting Africa. Ethiopian Airlines and the African Development Bank have signed a $500 million deal to build Africa's largest airport in Bishoftu, Ethiopia, with capacity to grow from 60 to 110 million passengers a year. Now, located 40 kilometers south of Addis Ababa, the hub will complement Bole International Airport and boost trade, tourism, and connectivity across Africa. And the project, part of Ethiopian Airlines 2040 strategy, is expected to create jobs, drive regional growth, and cement the carrier's position as Africa's leading airline. Now to Egypt. We're seeing Egypt scrapping plans to require halal certification on all UK dairy exports, protecting around £250 million in trade opportunities over the next 5 years. And the proposed rules, set to start in January, would have added about £1,000 per shipment in cost. Now, the decision follows talks with the UK government and means dairy products like cheese, butter, and milk can continue to reach Egypt without the extra certification. The UK exported £26 million worth of dairy goods to Egypt in 2024. UK officials say the move will cut red tape and boost growth for farmers while maintaining Britain's reputation for quality and high welfare standards. Let's move down south to the southern part of Africa. South Africa is sending a revised trade offer to the U.S. to reduce a 30% tariff imposed by President Donald Trump. Now, Trade Minister Paxtel says the proposal addresses U.S. concerns after earlier offers fell short. The steep tariff threatens 30,000 jobs, mainly in the auto and agricultural sectors. Agriculture Minister John Steenhuisen called the plan broad and open, but warned it may require changes to race-related policies criticized by Trump. The U.S. is South Africa's second biggest trade partner, with $8.8 billion in trade last year. Officials also seeking new markets in Asia and beyond for farm goods to limit the impact if tariffs stay. Let's look at other parts of Africa. Well, the startup market, so we see startup markets have already raised a staggering $1.4 billion in funding in the first half of 2025, a remarkable 78% surge year-on-year, highlighting a significant rebound in capital flows across the continent. Equity deals accounted for roughly $950 million, while debt financing saw a sharp uptick to $400 million, thanks in part to a blockbuster $137 million raised by Wave. Issuing markets are shifting. South Africa led the pack with $345.1 million. That's about 28.5% of that, closely followed by Egypt with $283.5 million. Senegal, powered by Wave's debt facilities, surged to $147 million, while Nigeria and Kenya posted $121.9 million and $83 million each. Now, the latest raise this month, Nigeria's fastest growing on-demand delivery startup Childec has secured $9 million in Series A funding to roll out a quick commerce strategy and accelerate its expansion across Nigeria and Ghana, led by Novastar Ventures and backed by investors including Y Combinator. The round marks a major milestone for the YC-backed platform as it bets on faster deliveries and deeper market penetration in West Africa. Now let's check in on the equities market now, especially markets we're tracking Africa, mostly positive sentiments for African markets at intraday. We look at Nigeria's NGX. It was trading near flatline, 0.03%, still at 145,000. It was at 146,000, but, you know, tiptoeing around that area. We see the GSE in South Africa holding really strong to 100,000 level, climbing now to 101,000, up 0.39% at intraday. Let's see how the market ends at the close of business today. Let's see Egypt, how they performed at intraday. Egypt's EGX is up 0.21%, 35,000 points. Not bad for that index. And the Nairobi Stock Exchange, we see it closing Monday's session also in the green, 0.61%, and closing at 162 points. Let's turn our attention now to Nigeria's stock markets, and we're going to be talking to Oluwatobi at the Sonyas, equity trader, Zcrest Securities Limited. Oluwatobi, it's good to have you on the show. Oluwatobi, good afternoon. We're seeing modest gains on the NGX. That's a bit of ticker around it. All shares doing a ping pong between 145,000 and 146,000 points. Where are we at with insurance stocks?
Thank you so much for having me. So what we are saying, um, extract it's more of let me say selected national investor or investment institutions. Fine, yesterday the ASI was around 145 points. So this morning it has added increase to that. Then it can hear me.
Toby, are you there? Can you hear me? Okay, I think we've lost Toby there, technical issues. But let's just see what's happening in other markets now. We look at Middle East. We see Gulf stocks, mostly negative at intraday compared to the African markets. It's red for the Gulf stocks. Let's see Dubai, how they perform. 0.53%, more than 0.5% down at intraday at 6,120 points. We see Abu Dhabi also down at intraday 0.05%, 10,296 points. Saudi Arabia, let's see how that market, performed, at intraday. Let's see the Tadawul, that's Saudi Arabia, 0.19% down. And the lone gainer here, that's the outlier at intraday, we see it up. That's the Qatar index up 0.3% at 11,405 points. Stocks, let's see if the U.S. markets performed as well, especially when we're hearing this U.S.-China trade truce on the tariffs, the 90-day extension for, for that, those two nations. Let's see how countries and investors reacted to that. Futures tied to the Dow Jones, we see it up 0.05% at 44,108 points. S&P 500, however, and the Nasdaq index, they were down 0.19% and 0.03% each. Not so, friendly or accepting that news so well, but we'll see. We'll keep tracking. And investors are definitely focused on the inflation report, which has come out now. We see inflation data out today, up 0.3%, in line with expectations. Investors are expecting that the Fed would definitely maybe cut rates at this point, but let's see how the Fed chair handles this. Let's move to Asia now and see how that market, fared at the close of business today. We see Asia markets mostly rose, with Japan's Nikkei 225 hitting a record high as investors assessed the U.S.-China trade truce extension that occurred overnight and that allowed the world's largest economies more room to negotiate a deal. Japan's Nikkei 225, we see rising 2.615% there, to close at 42,718 points. The Kospi in South Korea, however, is down 0.53%. And we see the Hang Seng in China up 0.25%. Still in China, mainland China, let's see the Shanghai index, how it performed. It ended the day up 0.5% and closed at 3,665 points. And we see the Nifty 50 in India, however, bucking that trend, going down 0.4%. Now, as for markets in Europe, where we're going to be talking to Lars Alter in Berlin to see how markets are still reacting to what's going on, especially with U.S.-China trade and other events going on there. But Lars, can you tell us what investors are looking at today's trading?
Yes, absolutely, Ini. How you doing? It's good to be with you. We have markets a little spread actually today in Europe. We have the CAC 40 in France up by a fraction. We have London exactly flat. And then looking at our home market here over in Frankfurt, we're down about 0.4%. Of course, as you can imagine, Ini, the topics are the same: trade and tariff and the upcoming meeting between Trump and Putin. There are right now so many unknowns, Ini, that trading seems to me has become a bit technical, especially here in Frankfurt for the German markets. Whenever the DAX right now falls below 24,000, buyers are stepping in. Whenever it gets over the 24,000 mark again, and that's where we are right now, if only by a tad, then investors are taking a breather. So right now there is enough optimism in markets apparently to sustain it at that level, but not more optimism, not enough to get much more added to the index here.
I know, Lars, you do miss Annie, but she'll be right back very soon. But German banks, we see, haven't been doing too well over the past few years as the country's economy was weak, but they seem to be getting out of the worst according to fresh data that we're seeing. What can you tell us about that, Lars?
Well, here's the interesting thing. We got a few numbers, Ini, that made headlines now. Germany's Commerzbank, that's the country's second biggest lender, had a loan volume of 104 billion euros last year, and they said they want to raise it to 140 billion by 2028. That would be pretty ambitious because that would mean growth of about 35%. Now, that's an old story. The new story, and here's that big number, Commerzbank has already seen now 8% growth during the first 6 months of this year. So, despite many business insiders doubting the company's lofty goals, they're apparently doing actually pretty well. Of course, they're not quite there yet, but they're optimistic, and that's due to the infrastructure investment plans that the German government has long talked about. And Ini, we've talked about it here as well. The German government suspending its long-held and constitutionally enshrined debt brake, taking on 500 billion in new debt to invest in infrastructure, building and fixing up roads and bridges, as well as the energy grid. And this investment is supposed to happen over the next couple of years.
Lars, but what will this help? How will this help the banks?
Oh, Ini, that's simple. As the government invests hundreds of billions, this will bring upon so many new work projects. It will give companies out there so many new jobs to do that many of them will likely invest in new machines, maybe even in new plants. Let me give you just a very straightforward example. If Germany wants to fix, let's say, thousands of highway kilometers, it will hire a lot of different companies throughout the country. They will bring in heavy machinery, and much of that machinery, for example, will be new. Maybe to replace old machines, or simply because more machines are simply needed to get more work done. Same with tunnel digging or with rewiring the grid. It all needs a lot of machines, and while the government is not directly in charge of that, companies down the line will get this equipment they need to do the jobs handed to them by the government. And of course, those companies will have to take up loans. Many of those machines are expensive, as is any investment in infrastructure, of course, and they have to be financed, and that is where Commerzbank, but also other banks like Deutsche Bank, of course, or the publicly held Sparkassen savings units, that's where they will come into play.
Thank you so much, Lars. But I know you miss Ini, but you've been speaking with Will Ibang, and I do know that we'll have more conversations. It's been funny hearing you say Ini, but I do understand your love for Ini. Don't worry, I'll send a message to Ini. Thank you so much, Lars Alter, for giving us the updates there. Thank you so much from Berlin all the way, Lars Alter, giving us the details there. So let's now jump to the crypto space. Laddie is here with the good news. Should I say good news or bad news from crypto space?
Well, there's good news as long as you're calling me Laddie at this point. But it's good news. You know, CPI data out in the U.S. not bad, and that's we're seeing an improvement there for Bitcoin, from 118,000 back to the 119,000 level. But Ethereum is doing much better this afternoon. $4,394. A big 5.24% pop there for Ethereum. So investors and the crypto space happy about the U.S. CPI data there. You know, meeting expectations, already seeing the impact live right there in the market. BNB is not left out. 1.93%, $810 there. Then some company there is asking ChatGPT. I'm sure some investors are also asking artificial intelligence what to expect for prices. That's for different asset classes, and we see OpenAI's new chatbot there has been asked about Bitcoin price prediction, and it gave a couple of scenarios there. Conservative, 118,000 to 140,000. That's by the end of 2025. That's the prediction there from OpenAI. There, 18.6%. That's the potential upside. It also said the most likely scenario is 140 to 200,000 That's the end of 2025, 18 to 69% upside. Then a optimistic prediction there from OpenAI's ChatGPT there, $200 to $250,000 per Bitcoin, 69%, but 100% upside from where we're at right now. Then the extreme bull case, about $250,000. So at this point, AI is doing a lot of things, but is this going to hit? I guess we're going to find out towards the end of 2025. Then we see Circle They're set to launch a Layer 1 blockchain, fresh from its blockbuster $1.2 billion IPO in June. Circle has announced plans to launch ARC, a stablecoin-focused Layer 1 blockchain set to debut on public testnet this fall. The EVM-compatible platform aims to offer an enterprise-grade foundation for stablecoin payments, foreign exchange, and capital markets applications. We also see Wales have scooped up 900 million XRP in 48 hours. XRP slipped into red earlier today, but we've seen that recovery there on the back of that data. But a massive whale buying spree is fueling optimism, for a potential rebound there. We're already seeing that rebound happen with XRP. Blockchain data shows that wallets holding between 100 million and 1 billion XRP scooped up an additional 900 million tokens worth over $2.88 billion in just 48 hours. So, those are the top headlines right there in the crypto space. So, Will, it all depends, at this point. Will AI be right when it comes to price action?
I was looking at that prediction and I said, no, I think I'm going to stay with, I'm very, well, let's be greedy here. Or should I go conservative?
Which one at this point?
Maybe 250K.
250K.
That's what we should aim for.
That's the highest of it all.
Of course.
All right, we'll definitely see which one wins.
Which one wins at the
AI
end of the day.
or natural intelligence forecast.
Oh, yes. We've been built to, depend on, well, not depend on AI, but to follow the prediction.
Right.
And I'm sure that they probably are spot on and they've seen some trends that maybe we haven't.
Yeah, but that's not financial advice.
That's not financial, definitely. And that's it on Business Incorporated. Thanks for watching. I'm Will Ibong, and we'll see you next time.